found Nxchange Capital one of the 2 tokens use cases. Today is all about the masterclass with regards to legal and STOs with regards to the Nxchange Capital case. My name is Olivier Rikke, and besides being the CEO of Lightbulb and head of research of the 2 tokens team, I will be the host of today, and I won't do this webinar on my own. No, actually, I'm here with many guests at the table and even abroad in Singapore with a live feed. And in reverse order of appearance, today we'll be joining Dion Bogaerts and then Liebau in the last session. Before that, Quintus Willemse and Jacques Berk. And we start out today with Alex Bausch and Marleen Evertsz, who are actually joining me at the table at the moment. Welcome.
Good morning.
Good morning.
So for the people who haven't seen this webinar before, please bear in mind it is a live webinar, so you can ask any questions anytime by typing it in the bottom, and it might appear in my screen, and I can pass them on to the guest at the table or even online in this case. So don't hesitate to ask these questions, because it's this interactiveness that makes a webinar obviously really attractive for everyone. Before we're going to deep dive into what 2 tokens is and Nxchange Capital, please introduce yourself a little bit to the audience, because maybe they haven't seen you before. Can I start with you, Marleen?
Yes, of course. My name is Marleen Evertsz. I'm the CEO of Nxchange, and I'm heading the Nxchange Capital use case of 2 tokens.
Thank you very much. Welcome again.
Thanks.
Alex.
I'm Alex Bausch, and I'm the chairman of the 2 Tokens Foundation, and we started this initiative, you and I, a year ago now. This has been an interesting journey, I can say. And I'm here to tell you what the 2 Tokens initiative is all about.
All right. Well, before we're going to do so, I did mention already it is interactive, meaning that you can ask questions to us, but we can also ask questions to you. And to start out with that one, we want to start out with a poll question to really find out who is in the audience today. And the first poll question is actually, what is your current role? So is your current role, I'm a professional investor, an institutional investor, a retail investor, an entrepreneur looking for funding, a civil servant, or a regulator? Please answer by clicking on the answer in the screen so we can see it popping up. I see the first answers coming up. So far, professional investors. Now other ones are coming in as well. So please click on the answer and we will see what's happening. And I can share the poll results, obviously, with you right after. So please click on the answer. And if you have any questions again, please type them in below and I can pass them on to the other people. This was obviously a warm-up question, so I'll stop this poll quite soon, and I'll display the results with you. We have a nice mix, although 50% is a professional investor on board today. So hopefully we can teach you more about the legal structure and the STO part. But we also have people who are entrepreneurs and retail investors and institutional investors. So it's a nice mix of all kinds of backgrounds. Let's start with something more in depth, and let's start out with the 2 Tokens initiative, obviously. Alex, can you tell us a little bit more about the 2 Tokens initiative?
Yes, so this is the 3rd webinar this summer. It's been a hot summer, and this time we're talking about tokenization for investments. But tokens, go back to antiquity, and so the purpose of this project is to create a roadmap, and you in the research team should know, on how tokens in digital infrastructure can be used. And while in banks and in financial infrastructure it's very common to use tokens, in other infrastructures such as smart grids or supply chain finance or what have you, tokenization is newer, right? So what we do with the 2 Tokens initiative is look at the use case, look at the token taxonomy, look at the legal implications, look at the economics, and all that is what we look at with use cases and with research. To do that, we can't do that ourselves, and we don't want to be an academic group here. So what we do is to be hands-on, work with entrepreneurs, work with associations, work with standards committees, and look at real use cases that are there in real life where tokenization is used today. So we're not looking at aim for the sky type projects that aren't live. No, this is happening today, people. And why do we do this? Because we want people to learn and to recognize that this is the fuel for the digital economy. So.
All right, so it's really a multidisciplinary approach, and also, besides the theoretical part, much focused on the practical part. Well.
Absolutely, yes.
So you already mentioned the roadmap a little bit. Can you elaborate a little bit more on the roadmap? What is the goal of the roadmap in this case?
Yes, so when we started the project, and we are partially funded by government and European Union, they gave us the request to create an interactive roadmap where any entrepreneur can go to if they want to do something with tokenization. And so, which means this is not going to be a blue book. No, this is going to be a website where people can answer questions, and by doing so, they will be shown the way of what is required. Do they need a utility token? Do they need a security token? Are they, prone on regulation? All those questions will be in this interactive roadmap. And what's more, we also help them create the white paper and look at the business case in what way that token should be created and should be deployed.
Yeah, so really the goal is to make it easier, or to actually lower the step, saying, hey, I want to do something with tokenization, but I don't know all the hurdles that I have to take, in order actually to say people, hey, tokenization is a nice way to do it, and through this interactive roadmap, at least it becomes clear what hurdles I do have to take.
Yes.
Yeah.
Because there's a lot of unclarity on tokenization, not just from people in the field, but also from the professionals. And so we wanted to show that what can and what cannot be done, if you want to stay within the legal frameworks and regulatory frameworks.
Yeah. All right.
Okay.
You did mention the practicality that we do want to basically test it against practical use cases. So what are the use cases we're actually working on today with the Two Tokens team?
Yeah. So first of all, this is a public project, so all the information is accessible to everybody. And it should be said that we have over 230 people working with us in the different working groups, research teams, putting all this together. So it's a huge undertaking. Let's not forget this summer's webinars, what we're doing here. And in the greater ecosystem, we have entrepreneurs, we have regulatory bodies, government, and they are all working with us. So we had a long list of 25 companies actually doing something with tokens. And so with the advisory board and research team, we selected 3. And we said, okay, let's first do the simplest one, and that is create your own utility token. A utility token that gives access to something, to infrastructure. And as it turns out, that was the 2 token that we used for our own, to give access to masterclasses and what have you. The second use case that we're doing is next generation capital, which is immediately more complicated, because now we're talking about security tokens, we're talking about legal regulation, a lot of stuff.
And before you're going to elaborate on that one, we're going to elaborate much more around that.
A lot more. Yeah. So there's so much that we could even fill 7 webinars on that subject. And then we have a use case on electronic bills of lading, where you use a bill of lading, which has been around since the Roman age. But a bill of lading today is a legal document that is used to transfer the ownership. And today that has to be a physical document, and we are now starting to use electronic means, and we transfer those documents using a token. And we do that with the Port of Singapore and the Port of Rotterdam, and people in the United States. At September 8th, we'll be showing a webinar on that subject. Needless to say, there are many, many more use cases. We started a use case this summer on central bank digital currency, but that is what we aim to do here at Two Tokens. And we can only do that with the support of the partners that are helping us, like the banks, like Nxchange, like government, Dutch Blockchain Coalition, who are all a partner in the Two Tokens initiative. So, my call to action, being the chairman, is join us.
All right. Thank you very much for this brief elaboration about what Two Tokens is. You mentioned already Nxchange Capital as one of the main use cases that we're looking at with regards to tokenization. And that's why you're here, obviously, Marleen. So can you tell us a little bit more about Nxchange Capital?
Yes, absolutely. With Nxchange Capital, we are designing a new financial structure and token ecosystem to accelerate and promote sustainable finance. We are one of the Two Tokens use cases, and in that context, we are organizing a lot of webinars where we go into more detail about these use cases. And today, we will be discussing the legal framework of this new financial structure. So it's an exciting day. It's by far one of the most complex topics next to the regulation, which we discussed in the previous masterclass. And I'm more than happy to share on what we are doing, how we are structuring it. There might be some people who already have joined previous masterclasses, but I still will go shortly into what is this new financial structure, what it's about, what makes it so special. Hopefully we'll get some questions if you have any. More than happy to answer them.
Yeah. Well, speaking of, the first question already comes in. A question from Henk. Henk, thank you very much. And I think it's for you, Alex. A successful token has an ecosystem. There are thousands of tokens already. The support to create a new token also consists of joining an existing ecosystem or existing tokens. So do we help people also routing towards existing projects, or is it just helping them from scratch and building their own?
No, we're doing the first. We're looking at existing companies who want to apply tokenization and build their own token.
Yeah. But also, if a new initiative comes in, do we help them finding existing initiatives already, so they don't have to reinvent the wheel?
Yes, obviously. It's better. For instance, look at energy. There's a lot of initiatives in energy, and if somebody wants to start trading energy with a token, we will. It's not our thing to build new systems. We will recognize those systems and connect them.
All right, Henk. Again, thank you very much for your question. Keep them coming. Back to you, Marleen. The challenges that we run into. Why did you start in Nxchange? There must be a challenge that you wanted to solve.
Yeah, absolutely. With Nxchange Capital, we decided to focus on sustainable finance. Sustainable finance is a huge topic right now. It's one of the most pressing topics if it comes to our generation and our children's generation. To get a more sustainable economy, we need enormous investments. And the financial sector needs to serve as an intermediary in the capital allocation of those investments. However, when it comes to sustainability, a more sustainable economy, it mostly comes to new technology or new ventures. And that in itself creates huge challenges, especially for the institutional investors to invest in. And that's why we we're using this new financial structure to build a facility that institutional money can flow into these ventures and into these new structures, because we see that there's just a massive mismatch. The institutional investors need to allocate larger sums of funds. The institutional investors generally don't have the knowledge about this new technology, and on the other side, there's a lot of development. So we have 4 huge technology universities that develop the most beautiful things, yet they don't get access to capital, and it sort of stops. And as the Netherlands, we're lagging behind. Something needs to happen. So that's why we developed what we call the Nxchange Capital vertical. And the vertical is a virtual basket of shares, or vertical basket of ventures, I should say, that we offer as one offering to the market. And this means that investors get an equal distribution over, in the case of Hightech and Yes Delft, the program managers with whom we collaborate, the investors get an equal distribution over 30 ventures when they invest. All the documentation, the whole governance, everything is standardized. And what's most important, there's a professional program manager connected to the vertical that has a proven track record in scouting new technology, developing it, monitoring it, and also has an existing ecosystem. And that's what I think the previous question of Henk is about. That has an existing ecosystem that can evaluate where these ventures are, whether they have a reason for existence. So investors can basically tag on that evaluation and invest along with qualified people within this area. And for that we have a collaboration with Hightech, which is the venture builder of Eindhoven University, of one of the venture builders of Eindhoven Universities, and Yes Delft, which is the accelerator program of Delft, where we found this connection in. What's new about this structure is that I think one of the most interesting features is that once the ventures are funded, and the ventures will be funded in multiple stages, they will be funded up until Series A, but they need to pass through certain gates to receive another round of funding. That is not new in the financial world, maybe not new in the VC world, but in the direct investing world, where there's an automatic settlement once a venture reaches a new stage of shares against money. That is new. Another thing that's very new is that in the secondary market, you won't be able to only trade the ventures, you will also be able to trade the vertical itself. And it can be traded on Nxchange, and hopefully, if other exchanges also allow a DLT setup, the basket of ventures, the virtual basket of ventures, can then also be traded on other exchanges as well, which makes it very special and creates all kinds of advantages in liquidity, in tradability. Most of the things have been discussed during the last regulatory masterclass, and I definitely would invite you to watch that masterclass as well, where Dion commented on that.
Another question from the audience, Bilal in this case. Thank you, Bilal. Who will be the program manager? Because that is a crucial position.
It's a crucial position, and therefore it's not everybody can become a program manager. The program manager, the two program managers that will be connected to Nxchange Capital use cases are Hightech, the venture builder of Eindhoven University, and Philips and ASML, who are closely connected to Hightech, and Yes Delft. Yes Delft is a second program manager that is related to the Delft University, and that also has a whole ecosystem of technology developers. It's mostly about deep tech technology, and these two players are the program managers for Next Generation Capital.
All right. Thank you again, Bilal, for that question, and please keep them coming. Going back to the Next Gen Capital setup, program managers are very important, like you stated, but also the state gate financing part, right? That
yes.
is like you said, it's not new for VCs, but new in this kind of way.
Yes, and the reason why that is, why the program manager is so important is because we allow this stage gate financing principle, and we can automate a lot, but not everything. The decision whether a venture reaches another level of maturity, and all these ventures will start around technology readiness level 4. That's probably a known term for investors amongst us, and they will need to be brought to at least a level 7, and there is an experienced program manager that can monitor and also decide whether this venture reaches that level. And connected to those levels, the venture will get another basket of funding, or a bucket of funding, I should say. And that's why the role of the program manager is so important. There will be 3 rounds up until Series A. All ventures in the 2 verticals which we are created will get a total investment of 1.2 million, and that will be spread out over 3 moments, 3 milestones within 3 years that need to be reached. The good thing is that these ventures now can concentrate on the technology that they are building. They don't need to be busy with raising capital, with chasing funds. They can focus on what they are here for and build technology that hopefully makes our economy more sustainable.
Because they do have the kind of promise that if they keep on delivering, the money will come in.
Exactly.
Yeah.
Up until the moment where they have a proven business model, where they have their first customers, their first revenue, and then the next round of capital can be either raised on the exchange, or it could be companies that will be bought off the exchange by, for example, Philips or ASML, that has an interest in buying this company because it develops something that is useful for these corporates.
Yeah. Obviously, it's one of the 2 tokens use cases, and we work with tokenization. What do you see as the real benefit then for the tokenization in this part?
The real benefit of the tokenization is mostly in the smart contracts that we will use. The very good thing is that this case will also run in a traditional setup. The institutional players still will work with icing codes. They will still have their central securities depository, who is Euroclear in this matter. That won't change. But within the trading environment, we use smart contracts to create a set of rules. And these rules allow us to whitelist investors, to allow certain market participants, but most importantly, allow us to create a virtual basket of ventures, and allow us to trade that virtual basket of ventures in the future on multiple exchanges.
All right. With that regards, before we move over to the legal structure, any additional parts you would like to share?
I think because we're now going to discuss the legal structure, and I think this counts not only for the legal structure but almost for everything. What we did with Nxchange Capital is we respected the law, we respected the regulatory framework. We're not going to change the law. It's a reason how it developed and how it got there, and we made it our benefit. So also within the legal framework, where we really discuss how this is set up, how investors will invest, certain rights or agreements between investors and ventures, in this case the whole set of ventures, can still be respected. And those are the things that Jack and Quintus later on will also go into, how that is set up. It's simple, it's easy, it makes all the shares tradable, while still respecting what is good already.
All right. Thank you very much. We're going to switch to the legal part right now. And I want to thank Alex and Marleen for your input. In the meanwhile, while we're switching the speakers here at the table, I have a poll question for you. And that is the following: to what extent do we need new structures for financing ventures active in the sustainability or energy transitions? A is that as an investor, it's hard to find suitable investment opportunities in this area. B, all current options are completely inadequate to facilitate financing sustainability and energy. C, figures are showing that we are lagging behind, and we need to claim our position with suitable structures for financing sustainability and energy transition. D, it is we should mainly focus on new tax incentives, or E, everything is fine. I'm not going to repeat all the sentences again because they're quite extensive, but please click on the answer below: A, B, C, D, or E. To what extent do we need new structure for financing ventures active in sustainability or energy transition? So I see people clicking already. Thank you very much for that. And also for the next part, if you have any questions in between, don't hesitate to type them in and I'll pass them directly on to one of our new speakers whom I will be introducing within a few seconds actually. On the background, we're clicking in the new microphones, etc. Looks like everybody's almost ready to go here at my left-hand side. So I'll stop the poll right now. It is quite interesting to see it's evenly spread over A, B, C, and D. So the good thing is nobody says everything is fine. Everybody sees new opportunities that we should change something in one way or another. So it's quite evenly spread. I'll show you the results on the display. And as you can see, almost evenly spread right now. And it is time to introduce the next speakers because we made a switch from Marleen and Alex to Quintus and Jack. Jack Berk, welcome at the table.
Thank you, Olivier.
Yeah, and Quintus Willemse, also welcome to the table.
Thank you.
We're going to talk about the legal structure around Nxchange Capital. But before we do so, please introduce yourself briefly to the audience. Jack.
Well, I'm pleased to. My name is Jack Berk. I'm a lawyer at the law firm of Cleber here in Amsterdam. I'm a corporate lawyer, and I'm assisting Nxchange and the others in this venture in understanding and bettering, if possible, the legal structure.
All right, thank you very much.
You're welcome.
And next to you, Quintus Willemse.
My name is Quintus Willemse. I'm the founder of the Share Council, a platform for employee participation and basically moving to a general participation. And our role in this is indeed guiding the next generation capital project into structuring the whole funding setup. And I'm happy to sit here with Jack on that. We have some experience ourselves in this and trying to copy that, but it's always good to have more experience at the table.
Absolutely. So we're going to deep dive more into the legal part now. So if you have any specific questions there, again, don't hesitate to ask them and I'll pass them on to these really highly knowledgeable people on the left side of me. I'm not a lawyer by background. I'm an engineer. So it's really for you in this case. So let's get started. What are the challenges we need to resolve in the legal structures or what are the requirements actually? So Quintus, can you elaborate on or start on that one?
No, that's a good question because eventually Marleen just explained it and we're looking at how do you get 30 startups together? How do you get all these ventures together in one position and how do you start arranging those investments in it? And what are then the challenges? And eventually we got to 5 challenges that we want to tackle, so to speak, or 5 requirements that we said, okay, this is what it has to do, what we're setting up. First of all shares should be easily tradable without any notary deed. That is the interesting part, especially here in the Netherlands, where you normally need a notary deed. The second one is also issuance of shares should be really easy without a notary deed. Thirdly, we said, well, if you do all that and you're going to start trading, the settlement should be super flexible and simple. Fourth, we would absolutely, of course, look on the investor side. Investor and founders, how do we fully protect these people? And eventually, fifth, all these 30 ventures, they are their own ventures, and they should be able to do business as usual. So these were the first requirements that we're looking at.
All right. These 5 requirements, we can go over them bullet by bullet, but can you elaborate on a few of them? Because especially, for example, no notary deed in the Netherlands, that's quite new, I would say.
Exactly. Well, it's not completely new, as Marleen also indicated before. We're not reinventing the wheel and going out of bound of what the regulatory spectrum allows us to. I do have to say, Jack will explain a lot about this, but the main focus on it is how can we make sure that all shares at least are certificates which you can trade without any notary deed. And that was It's a common thing in the Netherlands to do, but the way we're doing it in this structure to also oblige to the other 4 points, that's what made it really difficult. And we're very proud that we found a solution to that.
Yeah. So could you elaborate a little bit more on the solution, or is it more on?
No, we could. No, of course. I don't want to dive too deep in the setup of a foundation, because it's what Jack's gonna explain afterwards. But what we eventually saw is that if you're gonna set up a structure with certificates, basically given out by a foundation, normally in the Netherlands, you'll split any voting and economic rights, which is fine in the beginning. But if you want to oblige to all these 5 points, and especially also the protection of investors, you don't want to have voting rights, cut out of the equation. So that was something we had to struggle with, and we found some solutions to set that up.
And we're going to dive a little bit more on that one later on, right?
Yeah. Our focus eventually was, okay, you have basically 2 sides on the story. You got the founders that have their ventures they want to set up, they want to move their business forward, and you have the investors on the other side. How do you attain to both of their needs? And that has been the focus throughout the whole project. Eventually, last part of it is we needed a way to standardize it all, because we're doing it times 30, and if we have multiple verticals, we do 30 times X amount of verticals. So we need to standardize this. And that's how we found, in a way of setting up the foundation, of setting out standardized statutory articles, is how we found a way to really make this one big project, which basically in one breath can be executed.
And that's also what you mean with business as usual.
Exactly. Eventually, it shouldn't hold back the founders. It shouldn't limit the founders in their freedom of movement, of developing their own company. Although we still want to have everything standardized, which is not easy to do, but it works. Yeah.
Maybe it's nice then to switch over to Jack in this regards. So how do we structure this? How can we set this up?
We basically structure this as a very large group of individual limited liability companies. And as you know, if you want to make a venture tradable on a stock exchange, the common way to do that in Holland is to found a big company, a naamloze vennootschap, as we say, and everything that you see listed at the Amsterdam Stock Exchange is a naamloze vennootschap. That's not what we thought was usable for this structure. The downside of having a limited liability company, I think you mentioned it, Quintus, is that you always need a very useful person in the Netherlands, the notary, to get it incorporated, to get shares change hands, to get articles of association, and that's very helpful in individual cases. But if you want tradable shares, that's not helpful, because it takes time, it's complicated, it's costly. We don't want that.
And that's where we want to gain efficiency and make it easier.
Exactly.
Yeah.
That's why we were looking at a form. How can we use the limited liability company on the one hand, because it's a usual form, entrepreneurs know that form, but make it flexible. And we found a solution by putting the individual limited liability companies in a stock. And a stock, that's not an English word, but it's an abbreviation for Stichting Administratiekantoor. Some people say trust foundation, other people say administrative foundation, but it is basically a foundation that holds the legal ownership of shares in limited liability companies. Those foundations don't have any economic rights. They just hold the shares for the persons that hold the economic rights to those shares. And the persons who hold the economic rights receive what we call depository receipts, or DR's, in Dutch, certificaten. They're not physical documents, they're not certificates in a sense that you can hold it, but they embody the economic rights to the underlying companies, and sometimes more than the economic rights. I can explain that if you want.
Mm-hmm. Please do.
As you know, a vertical is nothing. Really, we're trying to sell you nothing here. vertical is nothing. Marleen already explained to you that a vertical is a notion of a group of 30 limited liability companies that are trying to be successful and that we hope that will be successful. And we have combined all those 30 companies into one administration foundation, and that administration foundation holds the economic rights in all these 30 companies for the owners thereof, for the investors. And the investors, therefore, have depository receipts in those 30 companies. Now, they have economic rights, I told you that, but they also have other rights because the structure is super flexible. If you have a certificate, a depository receipt, that's governed by a document. The document is the administrative conditions of the foundation. And those administrative conditions, they are actually a super flexible instrument. We don't have to go to the notary to make those documents, and we can make the rules that we want to create for the economic owners in those rules. So apart from the standard thing, like giving them all the economic rights, we can also say in those conditions, if we need to vote, we'll ask you how to vote, and then we will vote in accordance with your instructions. So in fact, the holders of depository receipts are very much like shareholders in any company that's traded on a stock exchange. The board of such a foundation is obviously critical because that board exercises voting rights. That board is there to make sure that your interests are protected. So who is in that board? Who's on that board? Those are people who in principle have no economic interest themselves. They must be independent. They must be knowledgeable, independent, and they must do just what they're there for. Make sure that the economic owners of these companies get their rights, their financial rights, and their other rights. That's it. There's one but, however. The program manager here has a very important task in the whole structure. And the program manager needs to be able to communicate with the board of the underlying companies, the boards of the underlying companies, and needs to perform certain duties, such as, I think it was mentioned in the previous part of this webinar, is a milestone complete, and does it mean that we need to go into the next financing round? How does he do that? Well, new shares need to be issued. But that's what we didn't want, because we wanted to be very flexible. So all those shares have already been issued. I'll come to that in a second. But the decision to get extra money for the underlying companies is with the program manager, and the program manager has the opportunity to do that through one special share in those foundations, which we call a priority share, which has just a certain right to take initiatives or to have a blocking vote, but no economic rights. Maybe I don't want to talk too long. If you don't want me to talk too long.
That's okay. But for the audience again, if you have any questions, don't hesitate to ask them, and I'll pass them on to Jack and to Quintus. But I think it's a very clear story so far, because there are no questions. So please continue in this regard.
If there are no questions, it may be too difficult too. But as the audience is pretty knowledgeable, I'll assume that I can continue. How do we deal with the need for extra capital? I explained in the beginning that notaries are very useful persons, but they are costly, time-consuming, etc. So if we need new capital, we cannot issue new shares. So the plan here is to issue all shares on day one and to convert them into depository receipts at day one, and to keep most of those shares within the companies as long as the money isn't needed. As soon as the money is needed, and as soon as the company is entitled to more money, which means a milestone has been achieved, as soon as that moment is there, the program manager says, hey, now there's a new capital round. We already have depository receipts that are in portfolio, that are in stock. We can issue those. We don't need a notary for that because we can do that ourselves. And the payment for those depository receipts is made at that point in time. And we've done that for 1 billion shares so that we can continue the rounds that we have foreseen. And once we've completed those rounds, the other mechanisms kick in, as Marleen explained before that.
And a question from the audience, from AXB. Thank you very much, AXB. Does the program manager have tokens in the venture?
The program manager does not have any economic interest in the venture. So the program manager just has a share that gives him the opportunity to do his work, but nothing else.
All right. Thank you very much, AXB. And anybody else, if you have a question, please ask them. Continue, Jack.
I think the last thing that I would like to note is what is the formal responsibilities of this foundation. As I said, these are independent persons. They don't have an interest. They must make sure that the interests of the investors are taken into account, and that's basically what they are for. So they are not allowed by themselves to sell the shares in the underlying companies that they have. They are obliged, if any money comes in, a dividend or a repayment of capital, they're obliged to transfer that to the economic owners. If new actual issuance of depository receipts occurs for a underlying venture, the venture will notify that to the foundation, and the foundation will say to all the holders of depository receipts, guys, there's new shares coming up, who wants to get them? And everyone who says yes, or who is obliged to say yes, then obtains those shares. In that sense, the foundation is totally transparent.
All right. You already mentioned the economic rights and the voting rights. Maybe it's good to elaborate a little bit more on that part. Quintus, with regards to those two, they are split. They are something separate in this case.
Yeah, well, that's an interesting part, and I'm happy that Jack already took the time to explain the first part in that. Normally in the Netherlands, an administration office, a foundation administration office, is used to indeed split economic and voting rights. There's one big difference between what we're doing here than what on average is done with the foundations in the Netherlands, and that is, mind you, the foundation holds 100% of the shares in every underlying venture. It's 100%, everything. There's nothing anywhere else, which all of a sudden moves all the rights and all the influence up towards the foundation, which also makes it easy for the foundation to move all the influence up to the investors. And that's what we eventually looked into. So economic rights are fully passed on to the investors anyway. That already happens in any foundation, as Jack just explained. So if any money comes in, it's pushed through. And if any other economic benefits are arranged, it will go through to the investor. On the voting rights side, that was a bit more tricky to get that set up, because in general, the foundation is used to keep the voting right within the board of the foundation. And especially that is done often if the foundation is just one of the shareholders of the venture. If there's, let's say, there's two founders in the venture, they are the main shareholders, and then the third shareholder is a foundation. They also have a board seat. Right now, the foundation has the only board seat. So any voting that is done on the foundation level, and that's the important one, is per definition also done on the complete board level of the owners of the venture. Which means that we all of a sudden had a way to move the voting rights forward towards the investors without too much difficulty, without too many difficult assignments we had to do. We don't have to write everybody up in the shareholder register, for instance. We manage everything from the foundation part on. There's a few things that are important in this. First of all, as I said, the depository receipt holds all the voting rights and passes them on to the investor. Secondly, for whatever share the venture gives out, and mind you, we're going to start with just giving out ordinary shares. But there might be a situation that there's a reason for giving out, well, there's of course priority shares, but it might be a reason to give out gumprefs or letter shares or anything alike. Well, that will also be passed on through the foundation. So a shareholder who owns, for instance, if we start with letter shares, who owns the letter A in depository receipts, owns the letter A in shares, owns the letter A in the venture. The second one is an interesting one that we did take notice of, and which Jack explained shortly, is the blocking vote of the program manager. Now that sounds quite like intrusive,
hefty.
Yeah, it sounds quite hefty, and especially if the fifth requirement that I mentioned was doing business as usual. Well, it might be, if someone has that much influence, might be difficult to do that. It only goes over three things. If the program manager, who eventually, in a way, is responsible for gathering these 30 startups and actually says, literally at the start, to all the investors, I know which startup this is, I know what they do, I vouch for it that they are doing the best they can in what they do. As soon as his program manager sees that there is misuse of any funds, the program manager can block it. Seemed to us fairly logical reasoning in it. The second one is if there are specific statutory changes, if they have an extensive influence, especially on, and that's the third one immediately, the investor. So any decisions which will harm the investor, the program manager theoretically can have a blocking vote on that. Eventually the voting is secured by the fact that any investor can also instruct the foundation to vote in a certain manner. Eventually, all investors combined will have their investors meetings, and in those meetings there will be cast a vote. Those will be organized by the foundation. If you cannot attend the meeting, it is possible to send in a proxy to have a binding voting instructions. Or you can ask someone else to come to the meeting for you. So the reason I'm explaining this, because this seems fairly arbitrary, but the reason I'm explaining this is because you really should see that we're mimicking what normally happens without this foundation in between. So for all the investors out there, we saw that there were a lot of them listening here, what you're seeing in this structure is basically nothing else than what you're seeing from day to day. That should give at least a little bit a comforting feeling that we set up a structure which made it easy to trade, still easy to have BVs, limited liability corporations, and still have everything very flexible and stable, while eventually everything basically stays business as usual. Business as you should recognize it. But if you eventually would read up on what we actually set up in the whole legal structure, you should be able to recognize, hey, this is actually what I'm doing on a day-to-day basis. Hey, this is what I see as an investor. Lastly in that is, of course, we also know that if an investor invests a hefty amount of money in a company from a day-to-day business, they get more influence in that company. It happens. They might even have specific agreements with the venture. Also, through this legal setting, also that possibility is still there, even though we standardized the whole thing.
All right. So
pretty proud of it.
but just from my understanding, I'm just a simple engineer from Delft and not a legal guy. Am I investing in the individual company? Am I investing in the vertical?
Very good question.
Yeah?
Yeah.
Who wants to take it on?
Well, we both can take it up.
Okay.
Well, maybe you can take it over. Yeah.
The whole structure is based on the fact that you're investing in the vertical.
Yeah.
The vertical is 30 companies. You've seen the structure chart before, and that shows that there's 30 companies, there's one foundation, and there's 3 groups of shareholders above that: the investors, the founders, and the program manager. In that sense, I would like to explain, in respect of the question that we had before, the priority share of the program manager itself has no value. It's just a decision mechanism. Yeah. Obviously, the program manager has its economic interest in the vertical, as you can see from the slides.
Yeah.
So that's basically what I wanted to say about where you invest in 30 companies, the vertical as a whole.
Yeah.
Interesting add-on to that one is, so as soon as you have invested in the 30 companies, so you invest in the basket, you buy it, there is because it's all different companies, it's all different shares, it's all different depository receipts, there is a possibility to eventually start exchanging the various depository receipts. Eventually, every venture is still on its own and is tradable on its own and stays fungible, flexible, and movable on its own. It's a very interesting start that there is. You invest in the basket, and after that, it slowly but surely should cause a market effect.
All right. So what are the investors' terms and conditions in this case then?
Well, I'm not the one who talks about economic terms and conditions, but I can explain a bit about the legal terms and conditions. And what I also don't, maybe you should explain that a little bit more to me, exactly understand is how that works with the trading, because I do believe that the vertical as such has an independent token and an independent ISIN number in order to make the vertical tradable as a whole.
Exactly, and every venture eventually also has on its depository receipt each an ISIN number to make the venture itself tradable.
Yeah. So the investor terms and conditions, apart from the economic terms and conditions, are obviously standardized for all those 30 companies, and we try to include all those conditions in the administrative conditions of the foundation, so that there's one document, one legal document that the investors have to look at to see what their rights and obligations are. I already explained the role of the board of the stock, and the role of the board of the stock is to be neutral and to make sure that the depository receipts look alike shares as much as possible. The stock has a right of first refusal. I think I explained that before. If new depository receipts, new capital is needed, if it's going to be issued, the stock will be receiving those and will transfer those to the investors. The stock will exercise the voting rights, but it will give those voting rights to the underlying investors and the founders and all the holders of depository receipts. So in that sense, the investor terms and conditions are put together in those administrative conditions, and that's basically what it is. It's not more complicated than that. And one aspect maybe, under certain circumstances, at a certain point in time, a company out of the vertical may want to be sold. For instance, an offer is made for one of those companies by a third party, one of the large corporates, foreign party, and in that situation, the board has the obligation to sell all the shares and the obligation to go to all the holders of depository receipts and tell them, guys, you need to sell all your depository receipts because there's an exit for this particular company, and we believe, together with the program manager and the founders of the company, that it's a very worthwhile exit, and so we in your interest, we cooperate with that exit. Yeah. That's what we call a drag along generally, and that will also be in the conditions.
With regards to that scenario, I do have a question myself, but before I do so, we're almost moving to the last part of this webinar already. So if you have any questions for Jack or Quintus, please type them in, because they're at the table for a few more minutes, and then we're going to switch over in a technical, most challenging way, because we're going to move over to Singapore actually, but we'll do that in a few minutes. Now, with regards to an exit of this vertical, one of the companies is being sold for very good reasons whatsoever. And the vertical contains around, say, 30 startups. Yeah. Will a new startup be fit in, or will the vertical then shrink, or is it possible to exit and enter a vertical at a certain point?
Well, whether it's technically possible, I could easily say yes. Technically, it's possible. But I believe that the whole setup is that the investors invest in this vertical, and that it is not intended that at a later stage companies with an earlier stage get in there. If money comes into the vertical because a company is sold, is exited, that money will be given back to the investors. Yeah. That's the whole point of this.
Important part to add to this, indeed, it's exactly what you said. But it is the 30 limited liability companies are set up all the way in the beginning. All the funds are assigned to these 30 BVs, so to speak. There will be not more and not less. Hence, there is little wiggling room, and it's not meant to be an ongoing pocket of money that has new coming in all the time. If one goes out, eventually others might follow.
But also,
might not make it.
For instance, what happens if one of the startups doesn't reach that certain stage for the next financing round?
Then the funding will not happen, funding will not go through, the money will not be spent, and will stay with the investors.
Yeah, because it frees up in stages.
It frees up in stages, but it cannot be used for anything else but the stages that are upfront intended.
Per individual
startup.
But eventually the whole pocket of money is cut up into 30 startups.
Yeah. And if one of the startups stops after the first stage, then that
part
remains. It's not going to be spent over the other ones.
Will not be spent over the other ones. Will be withdrawn. If one of the 30 spots is not filled out, that's also theoretically a possibility. Then also that funding will move back to the investors. It will not be invested.
All right. So that's also one of the protection mechanisms for the investors in this case.
Absolutely. Yeah. And it's very clear. We very much focus on the 30 startups and the 30 spots that we have.
Well, all of a sudden everybody woke up. So I have loads of questions over here. First, a question from Jetsets. Thank you, Jetsets. If we would not need a notarial deed for each transfer and issuing, would you still need to have this whole complicated setup?
Yes, absolutely. And the reason is you need this setup to not have to use a notary deed. There is basically, the Netherlands does not allow a lot of other ways to freely move shares around.
And that all has to do with the fact that they're registered in the Netherlands.
Exactly. Yeah, that has all to do with that. There is one point to it that some people also feel themselves protected by the notary deed. And we did incorporate all that in the statutory articles that we have set up for this whole project, that shares cannot all of a sudden all be sold, or depository receipts cannot all of a sudden all be sold by the venture to have fully dilution for everybody. Of course, that comes along with the protection that we build in.
All right. Next question. Question from Willem. What happens with the is in no? Within the number of vertical when an individual venture is traded? That's actually something we just discussed, right? So it's not going to be top again to 30 ventures. It's basically just gonna
it's slimming,
sizing
down. Yeah.
But thank you very much for this question, Willem. A question from Maddie. If an investor trades individual certificates and therefore they are no longer part of this basket, how does this create management difficulties for the BV, as during the milestones, the certificates are no longer part of the basket? So if they create additional outside the basket?
Well, from a legal point, that shouldn't be a problem at all. No. Because even if those depository receipts are traded, below that is still the foundation with the shares and the priority share of the program manager. So the relationship between the underlying company and the investors doesn't change, except there's another investor on top. Yeah. But the voting rights are still exercised by that particular investor. The voting rights on the shares are exercised by the foundation as before, and the program manager still has its initiating and blocking vote. So I don't think that creates any difficulties.
All right.
As Jack said it beautifully in the beginning, we're selling you nothing, and that basket is literally nothing.
Yeah.
So everything still exists, even if the basket doesn't exist.
All right. A question from Rudy. Thank you, Rudy. Typically, early stage ventures may change their focus all the time. They're all over the place with that regard, and they need to in order to find out their product market fit. So the product may change based on market and early customer interaction, obviously. How do you deal with that if the definition of the gates need to be changed over time as they are defined as set as day one? Is there room for a pivoting of the individual ventures in there? Or is this at a discretionary decision of the program manager to change these at the gates?
I'm happy they filled in the program manager here as well. Here you see the very important role of the program manager. I'm sorry, Jack, I didn't want to...
No, it's not a legal question at all.
Please. Here you see indeed the pivotal role of the program manager. Is this seen as an accurate way of working, yes or no? And if it's misuse of the funds, program manager will block it. If it's not, then fine.
Yeah. If it's just a natural process to pivoting
Exactly.
and say, we need this in order to reach the end goal.
Exactly.
It's okay.
Yeah.
Or it can be okay.
Yeah.
All right. And thank you for that question, Rudy. A question from Rutger. That's the last question I have for you from the audience today. How do you continually evaluate the vertical and separate venues? What if I, as a private investor, want to sell my investment halfway during the program and after the program? How does that work? Because obviously they don't evolve at the same speed. One will go fast, one will go slower. How do we evaluate them?
Very good question. Well, evaluation during the project is very much set in stone, so to speak. It's at the beginning basically already assigned. As soon as they hit certain the milestones, they'll have the new valuation. Yeah. As soon as the 2 years, because that's the length of the program, are over, then it basically becomes the market that decides.
But it could be that one venture goes faster through these stages than another one.
That theoretically, yeah. So it could be that after 1 year or after even half a year, if you go that quick, already get a free market or free flow of those shares and a free flow of that value. Then the market decides.
Yeah.
So,
am I allowed to ask stupid questions myself?
Absolutely.
If these individual companies are tradable, then there's a market price, isn't there? So if someone wants to trade, there's a market price, and the valuation is basically governed by the market. Is that right?
Exactly.
Okay. That's what I was wondering.
Sounds logical to me. But
Yeah, that's logical. For the investment cycle, the standards are set. But if someone sells it for a different price in the meantime, happy you.
Okay. That brings us to the end of the legal structure part, unless you guys still have something to elaborate a little bit more on.
I think we've said enough.
But I think it's time to move on to the last part, the STO part. And obviously, like we do with every switch of speakers, and I want to thank Jack and Quintus for their input. I have a poll question for you, so we can switch to a new person at the table and somebody online live from Singapore in this case. But first, the poll question that I have is the following. What are the most important success factors for a security token offering? Because we're going to talk security token offering a little bit more, because obviously Nxchange Capital is a security token. So A, high quality investment opportunity. B, return on investment. 3, adequate deal size. D, a compilation of the team. E, standardization in corporate documentation and investor agreements. The program manager for F, or G, a secondary market to be able to exit the investment at any time. So please fill in A, B, C, D, E, F, or G. We have many opportunities right now, and everybody is really clicking on the answer already. Please click on the answer so we can see the answer popping in. So what are the most important success factors for a security token offering? Right here, the switch went quite smoothly, I would say. So I'll switch to my ear plug as well, so I can hear Dan at the other side, and I'll introduce the new speakers, and in the meanwhile I'll stop the poll and I'll display the result. And for you, Dan, you can see the results as well, but Dion, maybe you can't see them. We have high quality investment opportunities as A. 1/3 says that part is the most important part. The other one is the compilation of the team, and the other ones are around the program manager or the secondary market we're talking about. So a nice evenly spread around the 4 of them. Let me briefly introduce the new speakers at the table and online. One is Dion Bogaert and the second one is Dan Liebau. I can't see Dan Liebau, but hopefully you can see him in the background as well. And there he is. Dan, live from Singapore. Can you hear us well?
Yeah, can hear you well. All good, thanks.
Yeah, and I can hear you in my ears, so hopefully people at home can hear you as well here. For this part, I'll step back because I'll hand the hosting over to Dion, who will start talking to Dan with regards to STOs. So the floor is all yours.
Okay, thanks. Hello, everyone listening in. Thanks to Dan joining us from Singapore. Today I would like to talk with you, Dan, about a paper, an academic paper you recently wrote together with your co-authors, Thomas Lambert and Peter Rosenbaum, on success factors for security token offerings. Sure. And I would like to start by asking you what you did in that paper.
Sure. So I guess we were all quite excited about blockchain and ICOs and whatnot, and then we thought, okay, now after the ICO craze was over, where can this technology be used in finance? Perhaps also in the regulated world, right? So that's why we thought, okay, securities on blockchain seems like a very interesting topic to explore a little bit more. So I guess in the paper we started providing a working definition for different types of tokens. First of all, so we define payment tokens, utility tokens, and security tokens from an entrepreneurial finance perspective specifically. And if you think about entrepreneurial finance, then very much the purpose of the token was the key sort of driver on how we structured that definition. What we did next is, oh my God, a lot of data collection. So you can imagine to scrape the internet and unfortunately manually scrape it and find out about the universe of security tokens out there took a long time. So in the end, I think we ended up with 280 offerings as the sort of universe, zoomed in on about 106 that we then found enough data about to make a little bit more detailed dive into those. We ran a regression analysis to really look at these success factors that you mentioned earlier to understand what drives funding success in the primary markets. We also tried to give a little bit more, it's probably wrong to use that word in the academic context, but market color, in the sense that we tried to describe how does the STO process actually work? What does it cost? What are the different regulatory frameworks around the world? We looked at the United States, Liechtenstein, Switzerland, Singapore, and Germany in a little bit more detail. And finally, we also gave a little bit of an outlook on how security token ecosystems might develop in the future, because obviously the technology has a lot to offer. Perhaps we're using very small, tiny bits of it. So yeah, that was the last 8 months of my life.
And you said you run these regression analysis. What exactly did you find there?
Okay, so I mean, it asked, what did we find? Let me just see. Basically, one thing that is very that came out quite prominent and is very interesting because it ties really nicely into the previous conversation with the other colleagues, is that for funding success, the voting rights play a significant part, right? So all else being equal, obviously there are many different things involved, but all else being equal, I think there's about 60% higher chance to complete your funding goal if you don't strip away the voting rights. And it's very interesting to see that, because if you assume that there's still some influence from the ICO type of people in the ecosystem, then of course giving as little control as possible to anyone who wants to write you a check is kind of on top of everyone's mind. But then what we're seeing here is that if you actually don't do that and observe what has been researched in corporate finance literature for the longest time, then your funding success is a lot more likely than if you didn't do that.
So this also gives scope to these different types of tokens that you've identified to really become more distinct categories going forward, right?
I think so, and we try to. I mean, we have a little table in the paper, but basically the most important parts of it, I don't think we have time to go through all of it, is that if you look at a utility token, which I think out of the 5,500 tokens that exist on CoinMarketCap today, probably high in the 90s percentage are utility tokens, and those are really tokens that give their holder a consumptive right to access a product or a service, right? And that is quite similar to a voucher of sorts, if you think about it, right? So you get this voucher, then you can spend it in an ecosystem. And again, we talk about the correct. And when we think about these utility tokens, we also have the purpose in mind. So the idea is really to use that token as a voucher, right, as a primary purpose. And I think if we look at the security tokens, then it's different, right? Security tokens are a digital representation of an investment product. And an investment product, obviously, people buy for very different purposes, not to spend it somewhere, but to actually be able to get some sort of capital appreciation. And then hopefully, if the company does well, perhaps give dividends later on if they have such rights attached to them.
So, but in the past, we've also seen people speculating on utility tokens, right? Did you see any patterns of such behavior? For example, uncertainty as to whether a product is an investment product or not, back in your data collection process?
So I guess a couple of things to say around that. So we very much focus on the primary market of security tokens. We did so because there's very little secondary markets developed yet, right? And I think, as we also say in our recent post, I think it got published today on a blog in Hong Kong, it's a very nascent market, yeah. So it's a very new phenomenon. Therefore, we have not so many observations. But I think if we looked at secondary markets in security tokens, the one thing that stands out is that the liquidity that everyone keeps talking about cannot really be observed, right? And I think we looked at one particular token that was a rather prominent one, the one of T0. I think in the primary market raised about $134 million, if I'm not mistaken. And up until recently, if you looked at the daily trading volume on a secondary market, that token traded about $10,000 worth per 24-hour period. So it's not exactly the type of liquidity that you would expect, or that people also promise, right, in their initial marketing materials.
Okay, thank you. In last week's webinar, linking into secondary market liquidity, we talked a lot about smart contracts that may actually facilitate secondary market trading. For example, by whitelisting investors to get a smoother process of not having to do double work in KYC processes. And make sure that regulations are complied by, and also the ability to trade the vertical as a whole instead of individual tokens, which may contribute to better liquidity. Now, all these things are implemented using smart contracts, the ability to make securities smart and flexible and be able to behave differently in different situations. Have you also looked at that in your study, or were there reasons that was difficult to do?
Yeah, so we looked at it a little bit, I think, towards the end of the paper. But I think what I can talk about is perhaps a few challenges and a few opportunities that we see in what we call native digital securities, right? So those are securities that are recorded on blockchain primarily, and where basically the record on the blockchain supersedes any other record. And attached to that, there's our first challenge, right? So you need a legal framework that allows you to record a share register on a blockchain platform. And I think it's quite interesting to see that I believe in Liechtenstein that there's a so-called Blockchain Act that allows for that. So that's a world-leading piece of regulation in my mind. I think just 2 weeks ago, Germany actually published a draft law for so-called e-securities, and in that draft law, there is also a section about how to maintain cap tables and securities as such on blockchain. So this is something that we're seeing, but I think it's not globally adapted yet, and every country has a different view on how to do it. I think in Switzerland there's also an opportunity to do it because the share registry is outsourced to the actual issuing company, but we have other jurisdictions where these things are not tackled yet from a legal perspective. I guess the second challenge is that we really need I like to call it an algebra or some sort of language to depict all of the different features that all of these securities that we have today can take, right? And if you look at the token standards that perhaps exist on Ethereum, for example, today, they're quite limited. Even with the new one, I forgot the number, not the ERC20, but there's another one that was done for securities. I think it's still not where it needs to be for wide adoption. So we need a decentralized version of an algebra that can depict all of these securities. I guess two more challenges. One is obviously the whole topic of fork resistance. So how do you make sure that some of these features that you define in a security don't get forked away, and if the core developers of a protocol decide that, interest payments are no longer required, thank you very much, and you just issued a 20-year bond, then you obviously have a bit of a problem, right? So in the context of securities, how do you make sure that these problems can't arise? And then lastly, and I think it's also mentioned in the recent German draft law, is the topic of finality. So, if there are important transactions with loads of zeros, people might not be so comfortable with a probabilistic a consensus algorithm, right? Where they have to wait a bunch of blocks and about a few confirmations, and then they perhaps get their transaction done. So I think finality is a big topic. I think not so much whether it's a private or public blockchain, but very much whether the consensus algorithm caters for finality, and therefore perhaps deterministic consensus algorithms are a lot more favorable to probabilistic ones in this case. I think I know of at least 2 projects that have implemented that. One is Zilliqa here, based out of Singapore, and then I believe, if I'm not mistaken, I haven't read the full white paper, but I believe Dust Network out of the Netherlands also caters to that requirement. So the good news is that there are blockchain platforms that cater to these sort of requirements. Now I talk a lot about challenges, huh? I'm sorry. I'm talking about benefits as well. So benefits, I think, basically there's very limited, there are few limits to the creativity once you have that opportunity to describe a financial product. And you can see that in today's centralized world. People can come up with all sorts of products if you can depict these features appropriately. I think one thing that keeps coming up is also this opportunity of everything trades against everything, right? So if there is a market where you can, where you have perhaps, your equities issued, next thing you know, you might be able to barter trade that equity for a cup of cappuccino somewhere in a cafe without really using a currency step in between, right? So that's interesting and puts the whole liquidity topic into a very different realm, I suppose.
Then it becomes super liquid and essentially becomes cash.
Yes. I mean, then the other thing that we're quite excited about is how do you use this in the context of employment, like employment share option plans, right? Is there an opportunity similar to what I think the project is doing with regards to the milestones of the startup? You could have that for individuals, right? So maybe every individual has a share option plan. And then in a smart contract, you say, okay, if you achieve this particular target, then another portion of shares, unlocks, gets transferred into your wallet, or you can even, they get unlocked and you can trade them freely against, a cash equivalent or so on. So I think this is also very interesting. And, if you think about it a little bit more, there's loads of opportunities.
And in your study, I really like the examples that you mentioned for everything that's possible. In your study, did you look at the versatility of the ability to use smart contracts, the amount of digital apps that is already available, that can be used in a certain STO, what is approved by regulators for an STO, how that could influence the success of an STO?
We haven't done that yet, but it will definitely be something that is interesting to do in the future. Right now, I think we have, don't quote me on the number, but a very, very high percentage of the issuances are done on Ethereum. So we know that the features or the possibilities are quite limited. So, it wouldn't really make a huge difference because the functionality is so limited. But that is something that in the future is probably quite interesting to look at.
And coming back to this, to the limits of Ethereum and also the cost of doing public validation and records that can become really, really big when this becomes large scale. Do you see a better scope for private permissioned type of blockchains to do this, or do you see the public blockchains like Ethereum as the way forward?
So I'm not such a fan of private blockchains because to me, one of the key interesting features of a blockchain is that anyone can join at any point in time, right? So I know that obviously doesn't go very well along with securities, but at the same time, I think we can split the infrastructure layer and then the security token layer on top of it, right? So of course, in the securities world, you need to play by the rules of the regulator, and I think you can. And what you mentioned earlier about making sure that people only have to do KYC once, and to use the data that is stored there multiple times and so on, I think is a good thing. But I do like the idea that the underlying layer one type of technology is perhaps run in a much more decentralized fashion. Yeah? And obviously that poses a whole lot of other questions in the context of finance, right? So for example, I've been pondering a lot about the identity of the validators, right? So if you have 21 of them, probably to move a big stock market on top of that blockchain, you would want to know who they are, right? Because right? But if there are 25,000 of them, maybe it's a little bit different, right? So these things are, I suppose, questions that have to be explored in the future.
Okay, then I would like to end with a question that specifically relates to the NGC use case. What, after all, the webinar is about. Do you have any recommendations for the NGC STOs that are planned, or any things that you think are particularly worth highlighting that are already done very well in the NGC use case?
Sure. So first of all, I have to thank the previous guests of this webinar, because I certainly learned a lot about how it's actually structured in detail. I knew the basics, but now I have a much better understanding, and obviously the whole portion on voting I thought was very, very interesting. I think the concept of tokenizing a portfolio of startups is quite interesting, yeah. Because if I'm not mistaken, I think the big incubators in the US are also trying to look into this, because for an investor, if you think about the motivation of people buying into startups, often is really about having exposure to the startup ecosystem, right? It's not so much about the individual company. So this is a really nice way to give that exposure to people who are interested in it, right? And that one I really like. Also because it's a little bit more diversified, right? So you don't have to put all eggs in one basket. You have that spread. 30 companies is very good. You can have different baskets for different themes. So now we have one around sustainability, which is very interesting. There's no reason why you can have those for different themes. So that's quite exciting. I think the most important consideration, I've said this many times, is to really understand who the buyers of these products are supposed to be. And I do believe that it's not enough to say institutional investors, because that means a gazillion things, right? There are so many different institutions. I mean, who are we actually talking about, right? And then also, who are the buyers of startup companies today, right? So let's not also forget about family offices, forget about high net worth individuals who might be quite interested in these products. But I do think that it's, if I understand the concept correctly, it will compete with venture capital firms, right? And the program manager sounds very much like an investment manager or portfolio manager to me, that has certain controls around the portfolio of companies that are represented in the what you guys call the vertical, right? So very interesting, but I think to do a lot more research and understand who are we actually trying to attract will be critical. The last thing that I wanted to say before we wrap up is my recommendation would be, don't pitch liquidity, right? And it's just because we've try to look at liquidity in secondary markets. It's not there yet. And do I see a bright future for security tokens? Absolutely. I'm very, I think the concept is fantastic. But I do think that it will take a while until we can really see liquidity or liquid markets in very, very, very early stage companies, right? And this is a structural question. I mean, there's a reason why small startups that are composed of 3-4 people don't trade on a major stock exchange, right? And I think that is something that is perhaps not the best argument to pitch the idea. There are other arguments that I think are very interesting: fractional ownership and your ability to diversify and so on. I think are much more powerful arguments rather than to say, if you buy this and it's on blockchain, then immediately you can buy and sell as you like.
Okay, thank you.
All right. Thank you very much, Dan, and great to see you live once again. We've been working together quite a lot. And thank you very much for your input with regards to the STO part. Also, Dion, thank you for interviewing and taking over my role for a few minutes. That's also very relaxing for me in this regards. We're slowly but surely getting towards the end of this webinar, but not before we have one more poll question for you, and that is the following one. And obviously, we want to know, do you believe in this vertical finance concept that we are introducing with the Nxchange Capital use case? And A, yes, count me in. I do believe in it, and am I interested? Yes, absolutely. B, it's very innovative and interested to learn more. C, complex but achievable and excited to see more information. D, a lot of hiccups in the future due to regulations and changing landscape, but not impossible. Or D, too complex and not achievable within the current climate within the Netherlands. So please click in the answer. We are very interested. Do you believe in it, and would you be interested in this concept? So I see the answers coming in, and I see that a large part of people who actually started still remains in this webinar, which is always a good thing. So obviously, or apparently it was interesting, and it doesn't surprise me because we had some top-notch speakers, I must say. So results are coming in. And for the interest of time, because we have 40 seconds left in this webinar, I'll stop the poll. So last chance to vote on it. Yes, count me in. Very innovative, and I want to learn more. Complex but achievable. I see a lot of hiccups, but it's not impossible. Or no, it's too complex. So the last votes are actually coming in. I'll stop the poll right now, and I'll display the results. And I'm happy to report that the majority is very interested, and some of and even the largest part says count me in immediately, and only one says it's too complete, but 90% sees possibilities, which is very, very great with this regards. So this really brings us to the end of the webinar of today and today's masterclass with regards to the legal side and the STO side of the Nxchange Capital use case of the 2 Tokens initiative or the 2 Tokens project. So that was it. 1.5 hours of interesting speakers, a lot of questions. Thank you very much for the interaction, and we want to ask you one more thing. That is, please fill in the questionnaire that pops up right after the webinar, because that gives us valuable feedback how we can improve and really give you even more during the next webinars and masterclasses, which are next week, the week after, and the week after that one. Next week will be around investor readiness, the week after around the token technology, more the technical deep dive, and the last one with regards to the business case of high-tech Excel and the whole program as such. So please tune in on the other ones, and please fill in the questionnaire that pops up right after this webinar. And for now, I really want to thank you for your attendance in this webinar, and hopefully see you in the next 3 weeks as well. Thank you very much for watching.